floor of the CME Group. This is Danny Riley on this Friday, May 14th. Not good at all, ladies and gentlemen. We've got a big buy bond, sell S&P asset allocation going on here, and it's for real. The euro currency is trading in the 123 handle. Crude oil is down $14 in 8 trading days. None of this is good, okay? And despite what everybody may want to make a very cheery picture out of this, the markets have been looking for a reason to correct for a long time. And now there's a lot of speculation that what's going on in Europe is what we went through last year, that this could be a much longer, prolonged situation. The VIX is up $6 right now. You know, traders cry for volatility. That's what they want. They want to be able to get in. They want to be able to trade. They don't want markets that are tight. They want to be able to see all this kind of confusion. This is the way they make money. But on the flip side of this is there's a very, very bad side to this. They've got the market to a point now up against some levels that we saw last Thursday and Friday, and we're going to let Tim talk about that if he'll come on and explain this. But you know what it is when the markets go up, you get a very, very big inventory of buy programs, and when the market starts to go down, they start to unwind these. And what we're seeing here today is we're trading at really big discounts throughout the day, which tells us that the program guys are setting their stuff up for sell programs. We've been seeing them all day long. As far as the volumes coming in, we had about 300,000 minis traded, and right now we've got about 1.83, so we've got about 1.5 million minis traded. That's not bad for this time of the day, but we suspect that number is going to go up significantly in the later parts of the day. As far as levels, you know, and Tim will get into this a little bit, we had 2 separate lows made around the 1044 half level on Monday and Tuesday. And when we broke down through there, our next support levels came in around the 30-33 level, and we broke down through there. And then our next levels came in around the 25 level, which is a key level, which we'll let Tim explain, because he's been on this. If you're not looking at these videos, if you're not paying attention to the stuff that we're putting out, you're not getting it. You know what I mean? This stuff comes right from the trading floor, right where the source is, and this is where it's at. You know, you can look at all the charts you want, you can listen to all the people you want, but this is where it's at, right 20 feet behind us. The mini, the options, everything is here. So we're going to let Tim walk up and give you a little bit better view of this as far as the technical side. But as far as we're concerned, the markets don't look good. The only thing that we're a little concerned about is that there is some statistics that say we could see some type of rally in the afternoon. And also then we're looking at that mutual fund Monday again, which I'm not even sure what the stats are. I think up 34 out of the last 38 or something like that. We've kind of fallen off that a little bit because of the down moves that we've been seeing lately. We're trying to stay away from being overly bullish here. You know, I mean, the sentiment is down right now. So what we've noticed is, unlike in the past, when the market would sell off and back and fill a little bit and then go back up, what it's doing now is it sells off and rallies and stalls and then goes back down. It's a flip-flop of the price action. We'll let Tim come in and give the rest of the technicals.
All right, Top Notch Trading back on the floor. This is Friday. If you tuned into the show on Wednesday, Top Notch Trading was pointing out that it was hard for him to fathom that this market was rallying like that. But he did point out 2 factors. Number 1 was in the S&P. He was looking for the breakout that took him to that huge sell-off of 72 to 75. Well, yesterday the regular session saw a high of 71.70, a high in the Globex of 74.75. Bingo. The other side of the coin was the NASDAQ future, looking for an area of 75 to a high of 83. What was the high in the NASDAQ yesterday? 83. Here we go. And I stated, Top Notch stated that if those levels would hold, that since they opened 17, 18 handles from the Friday's close of 1107 to 2520 and the S&P, that objective would be reached in one day. Bingo! The card is full. The NASDAQ, they've broken over 100 handles from the 83 high yesterday. The only thing that's left right now is when they opened at 25.20 in the SPOOs, they made an overnight low of 21.5. That's holding right now with a low of 24. The NASDAQ's low was 72.25, but they opened up at 76.5. The NASDAQ hasn't reached that objective there. Is there one more push lower? It remains to be seen. I was looking for the bonds to top out at 122.23, and as I talked, they've made a high of 122.18. Will they go one more time up? If they do, I expect one more push lower. And if the bonds do hold 22.23 and come off hard, like Top Notch anticipates, I expect a relief rally in these SPUs, and I could see the 40 handle by the end of the day. Remains to be seen, but look out below. Friday's last settle of 1107. Watch out.
And one last thing. Reuters just reported, and it's going out over all the news wires, that a money management firm called by the name of Waddell & Reed, during the last week during the decline on Thursday, when we started breaking through 1150 down to 1133 and then down into that 70 handle drop, that firm was responsible in a 20-minute period for selling 75,000 minis. Now, personally, we don't think that order was responsible for the calamity that occurred during that period of time. But what we do think is that there are probably several other people out there, firms, that were probably trying to do the same thing at the same time. As everybody shifted to the sell side, the computers and the bids evaporated, and down we went. You know what? It's not just going to be one thing that caused that. It's not going to be the CME. It's not going to be just the New York Stock Exchange. It's going to be everybody. When those systems shut down and those circuit breakers locked people out, they scurried all over to different exchanges. And some people that couldn't sell stock probably went into the S&P to hedge positions. In turn, that's what happened. We'll be back on Monday with more updates.